Okay, I think I'm live, so I'm gonna give this a couple of minutes to update. I'm going to speak with you all for a couple of minutes as I get some affidavits ready. All right, it's got to be working. Get on the topic of credit today. Get back on the topic of credit today. If you are saying hello, I may or may not can see it in my comment section because I have this block that I can't get rid of over my comments. So continue saying hello. Maybe enough comments will come in and I can actually see the comment past this block that I can't get off of my screen for some reason. But I had this question asked to me twice today about if accounts were deleted off of your credit report, could they reappear, right? Could those accounts reappear? Could they be placed back on credit reports, right? Could those accounts reappear or be placed back on credit reports? Okay, I don't know. I can't see my comments. I see some comments. Martin, I don't see who. Let me log on to my other live stream. Martin said he's ready. Brewer Man said yes, they can on Periscope. Hello, Trucker. So Trucker, hello. I was looking at that new Tesla electric truck vehicle. Let me log in and see if I have any more people who are saying hello that I can't see on my other screen. Let me log in and see if I have any more people. Okay, Nyla, I see you and Cheryl say hello. So hello to you all. I couldn't see that above that block. And Girl Trucker, the last one to say hello. So on Periscope, Brewer Man 777, I love those numbers. Why do you say yes, those accounts can be replaced on your credit report once they are removed or deleted, right? Hello. Show some digital love on Periscope. Make sure you hit those hearts and invite your followers, right? As I'm screaming on Periscope. Hello to you. Part 80. YouTube, make sure that you all hit the thumbs up, hit that like button. YouTube loves the algorithm. And don't mind me, I'm just sitting, I'm looking down because I'm getting ready to make a post office run, the day in the life in the Queens. I want to talk to you all as I'm working real quick. Simply because I've gotten this question asked more than one time today, whether it was via email or a post on my comment. And Facebook, make sure that you like this and share this on your personal page on Facebook. Let's get this information out. Then real briefly, I will speak about the second stimulus and why those cash payments may get to you or everyone quicker that qualifies, right? Why those cash payments. Thank you so much for hitting that thumbs up, Girl Trucker. And why those cash payments may get to you quicker, right? Brewer Man says if those accounts are paid in full, they won't reappear. But if there's a balance on the account, they could come back to collect. Okay. Let's discuss that. Now, take my AirPods out. I'll start with accounts reappearing back on your credit report, right? Accounts reappear back on your credit report. So whether you're watching this live or in the replay, if you're watching this live stream, make sure on the replay, make sure that you comment hello, say hello, and comment what city and state that you are from. So this is what happens. Oftentimes, in the credit restoration process or world, you have some people or companies, right, that will or may charge up to thousands of dollars, maybe $2,000, $3,000, maybe more, 3,500, right? Some may be more than that, to get quick deletions off of credit reports, right? Quick deletions off credit reports. And what happens is they promise these deletions within a 30 or 45-day time span, right? So they promise the consumer deletions quick, fast, and maybe within a 30-day time period. And so what happens is they do something called a credit sweep, right? Have you all heard of a credit sweep? I'm going to put that in the hashtag, credit sweep. Sometimes, known as a credit sweep. And what happens in this credit sweep are also known as an identity theft affidavit, the 605B form, and sometimes the 609 credit repair that people often misuse and say that with the 609 A1A, this requesting for showing proof of this account, bearing my wet ink signature or bearing my signature in wet ink, et cetera, et cetera. So through 609 and 605, they will, for accounts, right, claim identity theft. So hello, everyone speaking in and saying hello. I have Texas and Little Rock just joined in. And Merle, hello to you. And what happens is when the credit agencies receive these disputes, right, you or someone on your behalf are claiming that these accounts are a result of identity theft, right? These accounts are a result of identity theft. And so what happens is those accounts are temporarily masked, right? Temporarily masked or hidden or removed from your credit report to do a thorough investigation to see if these are indeed accounts that were a result of someone stealing your identity, right? Because if someone stole your identity, the credit agencies definitely would not want the accounts reporting any longer or within that direct notification, because you are claiming someone has stolen your identity, and this is in fact hurting or damaging your credit report, because these accounts are reporting due to no action or activity of your own, right? And so what they would do will, by law, the Fair Credit Reporting Act, by law, require that those accounts be immediately removed temporarily for an investigation to occur. And so what happens is they do the investigation, do their research, they do their due diligence. And many times, 9 times out of 10, to come back with the results that these accounts were not a result of identity theft. These were actually your account. For example, this was your student loan account. This was your charge-off account. This was your credit card that was 60 days late, right? This was your negative account. And see what happened, Merle Williams, you're absolutely correct. You need to be able to read your credit reports. And if this was filed, right, on your behalf, a credit sweep, then it will read on your credit report, because by law they have to remove any accounts as soon as they receive notice within the first 5 days that you are stating, or someone that you have paid on your behalf to state this, that these accounts are a result of identity theft. I did not create them. They was done falsely on the pretense of someone else stealing my identity. And once they have 30 days to investigate, and if that investigation comes back to find out that, hey, yes, these were your accounts, they temporarily remove them, right? Listen to the language and the dialect. Ms. Williams is absolutely correct. They temporarily remove them, and they are placed back on your credit report, right? Because they are found as accurate and true. So what some people would do is, during this 30-day window of investigation, they would go and get things like vehicles, because it would temporarily mask these negative accounts. And it would appear that this person may be credit worthy because it's not showing a list of negative accounts, right, during the investigation process. But they will pop up and reappear. But now with FICO 10, and that's why FICO 10 is into play, because now with the FICO 10 new scoring models, lenders and banks will be able to look at the 2-year history of your credit profile and not just a 30-day snapshot. So that's one of the main reasons why FICO 10 it has been put into play for July, because banks and lenders know that we are entering a recession, and they do not want to risk giving money to risky borrowers, right? They don't, or in other words, they don't want to loan out money when you have a high chance of defaulting on the debt, right? So Sean Doe asks, what does the investigation, the Bureau of Debt Creditor, the credit agencies, also known as credit bureaus, will do the investigation? They will contact the creditors. The creditors will identify your information and verify if you did indeed create these accounts. I do not believe in credit sweep. There are sometimes when 605B affidavits are applicable, but never when it comes to removing charge-offs, collections, or student loans should this be applied. Because if you are indeed the loan holder, or the account holder rather, then the accounts will be replaced back on your credit report. All right. Peace Queen. T is for Ty. Hello, Ty. Can a debt be sold to a debt collector? Can a debt sold to a collector be placed on one's credit report a second time as a delinquent if not paid? No, that's not a weird question. It's a very good question. And yes, a debt that is resold from one debt collector to another can be replaced back on your credit report. So that's a great question. What happens is, oftentimes, if you are successfully in disputing a debt collector and they did not have the rights to place that collection on your credit report, or they replaced their collection on your credit report inaccurately or incomplete and making it unverifiable, then you get it deleted. And once it's deleted, they may then decide that they want to sell your debt to another debt collector, because not only cannot legally collect from you, they also at that point cannot damage or hurt your credit score. So they may sell it to a second debt collector, and that debt collector may replace the account on your credit report. Another situation when something happens is you have successfully removed, let's say, a student loan account from your credit report, right? And that account has been successfully removed because maybe there were some errors in how the account was placed on your credit profile. And then you go back into delinquent by not paying that student loan as you should, right? Then that student loan account has the right to update and place back on there that you have a separate delinquency on that account, which will allow that account to be replaced, but now replaced as maybe 90 days late or defaulted or something of that nature, where the first time you may have got it deleted because the account balance or accounting information numbers were not reported accurately. So if you dispute it more than a few times, many times they will permanently delete it from your credit report. On Periscope, dispute what? Accounts. If you dispute them more. This is my thing. Never dispute the same account the same way, right? Because you'll get the same results. And it is time consuming. Because once you receive notification from the credit agencies that account has been updated, then they have made some updates and changes to that account. So now you have to look at what updates and changes were made, and you have to now have a second strategy and attack it a second time in a different way. So if you're going to continuously to dispute accounts verbatim, then you will not have a high success record of getting those accounts deleted. To contact me, you can reach my website, www.fixmycreditandcash.com. I will show you the website. And I will. My website, www.fixmycreditandcash.com. Thank you, Rudy. Rudy says checking in on YouTube. Thank you, Rudy B. And work. Okay. So let me share my website with you all. If this is your first time tuning into my channel, I'm the queen known as the Queen of Credit, Cash Flow, and Collectors, because I also assist people with disputing debt collectors directly, in which they do not legally owe the debt. This is one letter, for example, from Credit One, if you can see this on my website. And it states that, thank you for contacting Credit One Bank. We received your communication stating you never applied for the above referenced accounts. In response, we initiated an investigation. We found that you are not responsible for any previous or further balance incurred on this account. So this was an account that this person did not apply for. And it was not only deleted from the credit report, that it was also deleted, or they were not liable for repayment of the debt. I also do this whether you did have accounts with the original creditors or not. If your the account was sold to a debt collector through the Fair Debt Collection Practices Act, you have 30 days to dispute and ask for legal validation that they are authorized to collect from you. And within 30 days, if the debt collector under the Fair Debt Collection Practices Act cannot produce that legal validation, just know a itemized bill or a printed bill from the original creditor is not legal validation, right? So if they send you a bill from the original creditor, that's not legal validation. I also have the Queen of Coins Silver Stacking Report. Silver and gold is real money, right? And what happens is the more money that's giving out or produced or printed out and provided to the public, to consumers, whether it's informed by the stimulus, whether it's in form of stimulus payment, or it's not an increase in wages, but what the government doing now, printing more money, giving money, giving the unemployment, right? That causes they're giving currency, which is cash, and that causes money, which is silver and gold, to increase in value. So if silver now is predicted to give you a higher return on your investment than gold if you have physical silver and gold. So you definitely would like to invest in that silver stacking report. Now, to receive credit coaching and consultation, this is my custom credit analysis. So you can know the steps of how to become a potential client with me, and help restore your credit. And hopefully, after it's restored in a quick and efficient manner, also can help you revision your credit to do more with your credit, right? Because you can make a lot of money off of debt if you have the right credit score and the right mindset. So you start here, you buy now, then I only use this tri-merge credit report. So you will have to pull your credit report here. This is the link. It's $1 for 7 days. YouTube video, then you email me your credit report, and within 5 business days or sooner, I will respond to you with a credit analysis, give you in detail PDF format what things that will need to be done to help improve your credit and permanently deletions. And in the best, time, I think, turnaround time that's out here in the market, versus, going with month-to-month programs that could take up to a year to get minor results done. So that's my website, fixmycreditandcash.com. And you can reach me on there to get your credit analysis. Now, the second part of this, and then I'm logging off, is second stimulus. If I don't have any more questions. The second stimulus payment could deliver even faster cash. Let's research that article. Wrong page. Okay, so let's see, it's the wrong page. Okay, so let's look into this. Second stimulus could deliver cash even faster. Lawmakers agree that household could get a repeat round of $1,200 checks, and the IRS is posed to send out that money quickly. Congress is posed to approve a second round of stimulus payment for U.S. households, and that money could reach Americans at a faster time. The Internal Revenue Service now has procedures, online tools. Wow, interesting. Online tools, procedures, bank accounting information, coordination with other agencies that it did not have set up in advance when the first round of payments were approved in the spring. That's interesting. And this is why gold and silver prices, and again, silver is still about $25 an ounce right now. I think it's maybe $10 over the spot price. But now that they have systems in place, I am predicting that The U.S. will be totally digital by as early as January of next year, 2021. And this was the whole concept or reason behind them stating that it was a quote unquote coin shortage, right? And you have to ask yourself, and I'm going to ask you thought provoking questions because I know you've never been taught this. The most you probably can learn from this is on YouTube, right? YouTube University. But because this was not taught in schools and it was not taught in schools strategically, right? Um, who does our government owe, right? If you go on the U.S. debt clock, if you go on the U.S. debt clock, and while you all alive, I want you all to answer this question for me as I pull up the debt clock. Thank you so much, Carolyn. Hey sis, keep doing what you're doing. It's awesome. Also in the credit repair business, it is greatly needed, especially in our culture. It is greatly needed, Carolyn. But if you're in the business, you know that people are often impatient, or they come to you in desperate need after their credit is in total um, turmoil, I guess, for is the right word for lack of a better word. And then they are, I get quick results, I get fast results. And not just because I know the laws of the Fair Credit Reporting Act and I've been in this for some years, but because my turnaround time is so high. When people sign up for other services or a month-to-month program, it may take that company up to 7 to 14 business days before they, even start working on their credit report, right? And so, with me, you get it maybe 3-5 days. Is ready to mail off, ready to go, and your affidavit's in the mail. So that's one of the secrets to my success, right? Of all of that in combination is secret to my success. I tell people all the time that if you only know one or two laws, right, of the Fair Credit Reporting Act, then you definitely should not be in the credit repair industry. All right, Joseph. For some reason I can't see all my comments. Okay, Joseph, still waiting on you. Yeah, Joseph, I'm sorry. That address removal is like $125 services. And it just really wouldn't, I'm gonna be honest why I have you live. It just really wasn't worth my time to do. If you know someone else can do your credit address removal, please reach out to them and to get those services done. Or I don't even know what the hang up was because I exchanged like 2 or 3 emails with you. And let me see. I don't know. I've been very busy these last 5 days with credit and getting people more cash flow through the home-based business. So let me try to look up your email now and see what was the last email correspondent. Oh, you wanted to get the fee? Yeah, just go ahead and go with someone else. Let me see. You did get your documents. You had your documents. Okay, Joe. So just since you already got your documents notarized, um, I mean, let me go ahead. I'm going to respond to your email live, Joseph. Do it right now. So check your email. Because I don't think you signed up. Joseph, you didn't sign up for a credit consultation, did you? You never signed up for a credit consultation. And Joseph, do you already have an account with Experian? Okay, Joseph, so check your email. Just sent your email and got that taken care of. Yeah, you did send the paperwork, so I just okay. So just check your email. Okay, and go to Experian. Go to Experian here. You can get a free account. You need to do that as well. And I'll put the link here. It's a long link, but I think you still can just click on it and copy and paste. Yeah, just click on that link or just go to Experian.com and create a free account. So this is the US debt clock, right? And sorry for that, I had to help a potential customer, right? So this is US debt clock. It's showing that the US national debt right now is 26 trillion, about 26 trillion, 554,992,000. I don't know. I can't even pronounce it. I just know it's 26 trillion. Whether you're watching this live on the replay, who who does you see the government symbol here? Who does the government owe this debt to? Right? Where is this owed to, and how will it repay it? And then if you look here, this is your gold and precious metals report. Gold and precious metals report. Hold on. I think I went out. Okay. And you will see that gold is up 26.78%, right? Silver up 37.90%. So I'm telling you all to get that silver stacking report on my website, www.fixmycreditandcash.com. Another thing you all we need to look at is the ratio. The dollar to silver ratio is 3,934 per ounce, right? And the dollar to gold ratio is $32,625 per ounce, meaning that for every $3,934 of dollars that's printed or distributed equals or equivalent to an ounce of gold. And for every 32,600, just some people yearly income, a person's yearly income, $32,625 distributed out is equivalent to per ounce of gold. And I think 3,934 is equivalent to per ounce of silver. Then you have your dollar to crypto. It says 65. The lower this number go, the more valuable the cryptocurrency market would be. So, who is the United States in debt to? No, it's not just China. We do owe China, but it's not just China. It's not just China. The United States, the government, is in debt to the Federal Reserve. Federal Reserve, the IRS, the Fed is not federal. They have no reserves. And when they print out money and create bond debt, the government has to repay. And the government repays by taxation and labor, human resources, consumers. We repay. We have to repay the IRS. And that's why gold and silver is hoarded by the government. In 1934, it was illegal, made it illegal for citizens to hold gold and silver, which was money, right? Which was money, and they made it illegal and they confiscated those citizens, gold and silvers in the 1930s. And the IRS, or the Federal Reserve, is made up of families that own 25% of the nation's wealth in 1910. And those families still own the Federal Reserves and operate the Federal Reserves today. So what they do is, the way money is debt. It tells you, thank you, Regina. Regina, I'm so proud. Let me give Regina a shout out. She just gave me a $4.99 super chat. Received an email this morning for Regina that she has hit executive director in the home-based business. So if you all are watching this live on the replay, you all give Regina some virtual or digital love, as I call it, and tell her congratulations. What does that mean for her? She's 3 people. She's have enrolled in the business. She has now positioned herself to get daily pay, starting out as $5 a day, $60 a month. And then once she helps those people get 3 or build a team of people in the home-based business, all by recommendation referral, right? Recommendation referral, then she will receive up to $20 a day, a daily pay, when her organization reaches up to 12 in the total organization. So congratulations, Regina. Thank you, Queen. I appreciate the $4.99 super chat. So, right, and that's why people, when you have a job, and this is on tax with Regina, you have to go to HR, or what we call human resources, right, to set up your W-4 for any health issues, for any internal issues that you may have within your job, then because you are the human resource and you are taxed higher when you work for money. That's why the rich and wealthy don't work for money. They have, or work for cash or currency, right? Because the IRS prints it. It's also known as fiat currency. Fiat in Latin means so be it. Why does that make any big deal? Well, what it means is people that this used to be back, there used to be called gold certificates and silver certificates, right? It's called a silver dollar. This is the gold certificate, and meaning that they used to be backed by physical silver and gold. So when you had a banknote or a gold certificate or silver certificate, it's the only thing that can be used to pay debts. Constitutional said that, right? It's constitutional. And so whenever people, it was heavy to carry and transport physical silver and gold. So paper, gold certificates, and silver dollars made it lightweight. And when you would exchange a lightweight silver or gold certificate, you were supposed to get the actual money, which was gold and silver. So this is why that as the feds continue to stimulate the economy through stimulus checks and print out and give people unemployment or free money, right? The government is in debt to them. Now, we are in debt to China as well, but we are in debt to the IRS. And so you are taxed on your dollar through your job to repay that debt, and the prices of taxes increase. And the repayment of debt, and this is why gold and silver always prices or the value of them cost-wise gets higher in recession, because the type of payment that the IRS has to receive, or the feds have to receive from the government to legally pay off a debt by constitution, has to be gold and silver, right? They want the real money while they give you the monopoly money, and they tax you to pay the monopoly money back. So why are you taxed so high? Why is your dollar taxed so high? It's taxed two ways. It's taxed off your labor, and it's taxed off inflation, or the increases of prices. But if you all don't know, in 2008, during the Obama administration, two things detrimental happened that changed the financial world. Number one, all student loans became federal. They were no longer private student loans, right? Meaning that you can't discharge them into bankruptcy anymore. So because the government won't cancel out their own debt, you can't go to a courts to cancel out a federal debt, right? The courts won't cancel out each other. So now student loans has to be repaid, and you can't, like credit card debt, claim them in bankruptcy to legally discharge your debt, right? Number two, second thing happened, wages began, no more increase in wages, right? 2008, the Obama administration stopped giving those pay raises, because what would happen is, like back in the 1950s, for example, you could buy a vehicle for $2,000 and a house for $7,000. Now inflation. So the only way that people or consumers could beat inflation without having to just be slave to it, which an increase in pricing, was to have higher wages. Well, 2008, that last crash, your pay raises, right, or the wages of your jobs, um, legally is not increasing, right? And I won't get into what happened with that, but the wage increases stop increasing. That's why a lot of people since 2008 have not seen any raises in their paycheck or from their labor. And it's done strategically, because if there is no debt owed, meaning that if everyone was free of debt, free of mortgage debt, free of vehicle debt, right? And you didn't have to repay the banks could not charge you interest. And if they could not charge you interest, then the feds could not get any money. So your taxes and your labor from your job, you are the human resources to the government. So they can always be in debt to the Fed. But when the Fed want their money, when these rich and wealthy families want their money back, who owns the federal government, they want real money. They don't want paper currency. And they're going to want gold and silver. So it looks like the plan now is to go digital. Let's just, trash cash. Let's get a digitalized system in place. Let's bankrupt it out. Let's give these people this paper money so they can be highly indebted to us for years. And that's why anyone owning physical gold and silver, which is real money, you have a high commodity, because this is what the Fed is going to want once the the economic system resets itself, right? So that was a very in-depth lesson that I tried to explain as much as I could. So I'm logging off. I have to get to the post office before it closes. Again, thank you, Regina, again for the super chat. And I may go back live this evening. I'm not sure. Depends on how much work I have to do or how much rest I may need on my way to the gym. So you all have a great evening.